Welcome to the channel Get Rich. Today we are going to look into a company which belongs to specialty chemicals industry. So we see a lot of companies in specialty chemical niche. They are growing up a lot. They are going up in price. They are increasing their profit, revenues, and so on. One example can be Deepak Nitrate. They went up quite a lot in the recent years. So specialty chemical industry as a whole is getting a boost because of China. Most of the customers are getting out of China and they are looking for more diversification, like economies like India. So specialty chemical industry in India is getting a boost. So let's look into a specialty industry first. So if you look into a global specialty chemical industry size, so it increased from $610 billion in 2014 to $805 billion in 2019. And if you are looking into 2025, these are how much it's going to, the market is going to increase. So it's about 6.4% increase from $805 billion to $1.17 trillion in 2025. And if you look at the Indian specialty chemical industry size, so it increased from $18 billion to almost $32 billion with a CAGR of 11%, and it is expected to increase at a CAGR of 12.4% from $32 billion to almost $64 billion in 2025. And if you look at the specialty chemical industry by different segments, so agrochemicals belongs to the biggest chunk with 29%, and then we have dyes 22%, and then other functional ingredients, surfactants, and then base ingredients. Textiles is about 6%, and then polymer, construction, and personal care. So these are the different segments of how much specialty chemicals is required, depends on different segments. And if you look at the organized versus unorganized share in Indian specialty chemical markets, it's about 70% of the market is organized sector and 30% is about unorganized sector. So let's look into the company today. We are going to look into its Rossari Biotech Limited. So Rossari Biotech was started in 2003. They are among the largest manufacturer of textile specialty chemicals in India. So they have three main product categories. So first one is home, personal care and performance chemicals, and the second one is textile specialty chemical, and then the third one is animal health and nutrition. So these are the three different categories they have their products on. And the company has two R&D facilities, one at Silvassa manufacturing facility and a research lab at IIT Bombay. So they are a pioneer in Indian specialty chemical space with 2 decades of experience. They have about 3,500 diversified products serving multiple industries. So they have 45 plus years of cumulative experience, and then they have 3,500 plus products, 1,000 plus customers, 10 plus number of industries scattered, 200 plus distributors. If you look at their manufacturing facilities, they have 2 manufacturing facilities and they have 2 R&D facilities, and their total installed capacity is 252,500 metric tons per annum. And if you look at their key metrics, so their market cap is about 4,890 crores with a stock PE of over 51, and return on capital employed is 28%, and then they have return on equity 23%, return on asset 15%, and then if you look at the book value is 138 and the debt to equity is 0, so they almost have no debt. That's pretty good. And if you look at the dividend yield, so they're a growing company, they don't have much dividend yield. The price to book value is 6.44, current ratio is 1.73, so all of this ratio is pretty good. So let's go look at their price action. So the company IPO'd recently, or 2 years back. Their IPO price was about 450 rupees, and they listed, they have a bumper listing of about 50-60% over the price, and then it listed around 700 to 750 in the market, and then it went up to 1,500, 1,600 rupees, and then recently it almost went down 40 to 50%. So currently it's trading around 888 rupees. So let's go look at the PE ratio. So the P ratio shot up from 75 to almost 90, and then recently it dropped after the recent correction. It is currently trading at around 51 P. So then if you look at their business segment, what are their key business segment? We just saw they have 3 main categories. So if you look at the industry side, so in the industry side, segmentation of global specialty chemical industry, so they have 33% animal health, 43% home and personal care and performance chemicals, and 24% textile. But if you look at the Rossari Biotech, so they have about 56% of their revenue is coming from home, personal care and performance chemicals, 35% of their revenue is coming from textile specialty chemicals, 8% is coming from animal health and nutrition. So if you see over the years, So if you first look at the from financial 2019, how their revenue is panning out. So if you look at their 2019, they have higher textile specialty chemicals when compared with other categories, and then slowly textile specialty chemicals is share is reducing, and then home, personal, and other performance chemicals category is increasing the share, and then animal health is more or less the same. So recently they also acquired 2 3 companies. So one is Unitop and the other one is TriStar. So now it also in financial 2022 they also have revenues from Unitop and TriStar, which is also baked in. So they also grouping that in home, personal care, and performance chemicals. So in from the coming quarter, from the coming year, this category, home, personal care, and performance chemical category, is going to be much bigger because of their acquisition also working in the same category. So then if you look at their from over the years, the trend is like their home, personal care, and performance chemicals share is increasing, and then textile specialty chemical share is decreasing, and then animal health is more or less staying steady. The first one is being home, personal care, and performance chemicals. So they are there. They are the biggest category for their revenues. So what are their products, or which categories they are supplying their products to? So they have like home care, personal care, ink, paint and coatings, pulp and paper, hospitality, facility management, ceramic and tiles, water treatment, food and beverage, cement and construction chemical. So these are all belongs to the home, personal care, and performance chemical sector. So they have 500 plus products manufactured in this category. So they have a revenue of about 400 crores in financial year 2021, 56% of the total revenue. They have 100 plus customers in this particular category, and they have 40 plus distributors over 9 states. So if you look at the revenue growth from this particular category in the last 5 years, it's astronomical. It's increasing in a huge pace. So in 2016 and 17, it's about 34 crores. Currently, it's about 400 crores. So it went up quite a lot. And then the second one is textile segment. So in the textile segment, they have textile industry, weaving, preparatory, and they have yarn and thread processing, apparel, wet processing, textile coloration, fiber manufacturing. So how they have, these are all the different segments they are catering to, and they have 1900 product manufactured. They have 250 crores from this segment. They have 36% of their revenue in financial year 2021. And if you look at their customers, they have 500 plus customers in this particular category. They have 150 plus distributors in this particular category. And if you look at their revenue growth, it also increased, but then when compared to the other category like home, personal care, and performance chemicals, this one is growth is pretty less, but still they are also growing. And if you look at their different categories, they have different products in different stages. So I'm not going to go to that amount of detail. And then the next segment is animal health segment. So here they have poultry feed additives, and they have pet care products. So they have mainly enzymes, vitamin premix, trace minerals, toxic binders, and then acidifiers, liquid essential oil, liquid acidifiers, disinfectors, and they also have these kind of products in this particular segment. And they also have shampoo for dogs, cats, and horses. They also have different dog food kind of application. So they have like these different categories. They have poultry feed, pet grooming, and pet food and treats. So these are the different categories they are supplying their products to. They have 250 plus product manufactured. So they have 58 crores in this segment, 8% of total revenue from financial 2021. And then they have 700 plus customers in this particular category, and they have 50 plus distributors. And their revenue growth from this segment is also increasing quite good. And if you look at their business areas, where are their business areas? They have 150 plus distributors pan India. So they have 2 on-site technical support laboratory. So they have 29 distributors across 17 countries. They have 2 international offices in Vietnam and Bangladesh. So they are trying to do export as well. And then they also have a joint venture. So they have a joint venture with Buzil, a German company, offers solutions for institutional cleaning, hygiene, and disinfection. So the joint venture is called Buzil Rossari Limited. So they have a technology license agreement. So the specialty chemicals for institutional cleaning, hygiene, and disinfectant are sold to different institutional customers like hotels, airports, companies, malls, hospitals, and so on. So they are responsible for the marketing and sale of the product in India and other SAARC countries. And if you look at their manufacturing facilities, they have 2 key main manufacturing facilities. So the one is the Dahej manufacturing facility. It's a state-of-the-art plant. So they have 132,500 metric ton per annum. So they have 14 acres land area. They have 1,500 storage capacity. And they also have another manufacturing facility, the Silvassa manufacturing facility, they have around 1,20,000 metric ton per annum. Installed capacity, they have 8.6 acres land, 1,500 storage capacity. So they recently did 2x capacity expansion with the IPO money. They did a capacity expansion 2x, two times. So they have 10 plus new products in the infection control portfolio, and they also have they are also selling hand sanitizer and so on. So their manufacturing facilities, the current utilization rate of their manufacturing facilities is about 50 to 60%. So they still have room to double their capacity or double their sales without having to go through the investment or capex cycle. And if you look at their acquisition, so they recently did two acquisition. So one is Unitub. So it's a leading supplier of surfactants, emulsifiers, and specialty chemicals to different customer base, including large domestic and international companies. This gave some kind of synergy to acquire them. So they did acquire that. So they have three manufacturing sites in India, Unitub. So they with a total capacity of 86,000 metric ton per annum. And they also have the key manufacturing facility is also closer to their actual facility, so it is a natural synergy for them. So they acquired this particular company, and it's also generating quite good money for them. And then they also acquired TriStar Intermediaries. This is also one of the prominent companies in India in the field of preservatives, aroma chemicals, and home and personal care additives with high-tech distillation facilities. So they also acquired this particular company, and they have serving different industries from pharmaceutical, textiles, paints, automotive, agrochemicals, and so on. They have a manufacturing facility with a capacity of 15,000 metric ton per annum in Gujarat. So they also acquired this particular plant. So these two combined, they are generating pretty significant revenue. So pretty significant, which means around 500 crores, 550 crores this year, I would believe. And then their standalone would be 1,000 crores, and 500 crores is from these two companies. So that's a pretty good amount of revenues. They also have zero debt, so that's good. And also they recently acquired another company which is called Romac Chemicals. They had 50%. They acquired 50% from Romac Chemicals. So it will also be consolidated from quarter 3 financial 2022. So we will see from the next quarter their performance also taken into account. So these acquisitions will strengthen their home, personal care, and performance chemicals segment. So with this all this acquisition, they are currently at the utilization level of 50 to 60%. So they are this year they are expected to about 1,500 crores, and they say they don't need any capex until 2,500 sales. So that's pretty good. And if you look at their customers, so from FMCG companies, they have RSPL Limited, Gadi Detergent, and they have IFP Industries, Hindustan Unilever Limited, BSH Household Applications, Seco Technologies Limited, Rentokil, Initial Hygiene India Private Limited, Millennium Papers Private Limited, and then in apparel and textile companies, they have Arvind Limited, Raymond Limited, Ashnoor Textile Mills, Vaskar Industries Private, European Textile Chemical Corporation, Shockey Exports, and also in the poultry, feed, animal feed, or food service companies, they have High Tech Hatch Fresh Private Limited, Google Poultry Industries, Snake Farms Private, and Servoton Poultry Feed Supply Center. So all these are the different customers of Rossari Biotech. And also if you look at the revenue concentration, so the revenue from the top 5 customers across product categories, it was around 44% from the total sales in 2020. From the top 10 customers is about 53.72%. It's a pretty concentrated from 5 to 10, but still I believe they can go ahead with their customers. Their customers are sticky, I would believe. But then there is also a risk with this particular company. We need to take into account all of the different possible risks. So they don't have a long-term contract or engagement with any customer. So they always have kind of short-term engagement or short-term contracts. They don't have long-term contracts with the company. So that is, so in that way the revenue is not guaranteed. So it's always short-term contract, but they are doing pretty good with this contract. But we also have to look into all of these risks. We'll come to that in the coming section. And then if you look at their R&D, so research and development facility, so they have synthesis research, formulation and development, technical service, distributed control system for high level of automation. So it's also recognized by Department of Scientific and Industrial Research, Government of India. So they have like different eco-friendly solutions. They are also doing a lot of research in this area, kind of going green, sustainable initiatives. So they have 22 plus team members. They have 18 plus revenue from new products, 2 R&D centers, 339 plus new products and formulations. So then if you look at their financial statement, so as of now we looked into different businesses, how they are doing. So now we are going to look into their financial statements. So their revenue, they increased their revenue from around I think 230 crores to about 700 crores in financial 2021. And if you look at their EBITDA, it's about 123 crores in 2021. And if you look at their profit after tax, it's about from 15 crores to about 80 crores in 2021. And then if you look at the EBITDA margin, it increased from 10% to 17% in 2021. But in the financial 2022 year to date recent quarters, their EBITDA margin fell quite dramatically. From 17% it dropped to almost 11%, 11 to 12%. So currently their EBITDA margin is around 11 to 12%. It's mainly because of the raw material cost, which is jumping quite high, because you see in a lot of places the inflation, oil prices are at record high, and then the inflation rates are going pretty crazy. Different countries are even Fed increased keep on increasing their rates, and even India increased their repo rates by 40 basis points recently. So the economies are trying to curb inflation, but inflation is going pretty high. And then even the different raw material prices are increasing like crazy. So even in the recent analyst call, Rossari biotech, they mentioned one of their key raw material is increased from $2,000 to almost $2,700 on top of the price increase in the previous quarter as well. They were expecting to come down by 10 to 15%, but then it increased from $2,000 to almost $2,700. So that's almost crazy. It's about 40 to 50% increase. That amount of volatility they are seeing in their raw material prices. So they have to deal with that because they cannot immediately pass on the price to the customer. So that's pretty challenging times. So they are managing it. So they are estimating this will be still be there for the next 2-3 quarters, and then once if everything subsides, then their EBITDA margin can reach to the level of 15 to 16%. So currently they are struggling in the short term, but then once everything stabilizes, if they come back to the margin, then their revenue can also increase, and then if the margin also expands, then their bottom line will grow much faster. And if you look at their PAT margin, it increased from 6% to 11%. As I said, it now went down dramatically in the recent quarters. And if you look at their return on net worth, it's about 20%, and the return on capital employed is about 25%. So as you see in the EBITDA margin here, it's from one of the analyst report. So in 2022 it almost reduced to 11 to 12% from 17%, and then they are expecting the margin to increase again in the coming financial years. And if you look at their income statement quarter over quarter, so if you look at their net profit increased from 14 crores in June 2019 to almost 32 crores in December 2021. And if you look at their operating margin, it was 17%, 19%, 18%, 15%, even 22% at some point of time, and then 18%, 16, 16, 16, and then in September 21 it reduced to 11%. December 21 it again reduced to 11%. So now currently they are about 11% in the recent quarters. So that's pretty much a challenge for them. So they need to go through this, and then they have to increase their margin again, and then their bottom line can grow faster. And if you look at their balance sheet, so this is again the income statement from year over year. So from March 2019 they are doing about 516 crores, 2020 600 crores, 2021 700 crores, 2022 they are expected to about 1460 crores or 1500 crores because they have also acquisition included. So it's not only organic, but they also grow inorganic this year. So their organic growth would be, I believe, 25 to 30% in the current year. So if you look at their net profit, it increased from 46 crores in 2019 to almost 100 crores in 2022. And then if you look at their balance sheet, so their balance sheet is also increasing from 250 crores in March 2019 to almost 1300 crores in September 2021. So they don't have any debt at all, even after doing acquisition and also building a huge capex expenditure. Even after that they don't have much debt, so that's good to see. And then if you look at their cash flow statement, so their cash from operational activity was 71 crores, 57 crores, and 48 crores. And then they don't have how much free cash flow yet because they're a growing company, they need to invest. And if you look at their profit after tax growth from the different analyst expectation from financial 2022, the analysts expect 1400 crores in the top line, and then 2023 it's about 1980 crores, 2024 2250 crores. And if you look at their bottom line, so they are predicting 100 crores in 2022, 150 crores in 2023, and 200 crores in 2024. And if you look at their peer comparison, so they have some of the peers like Pidilite Industries, SRF, Linda India, Aarti Industries, Gujarat Fluorochem, and then Deepak Nitrite, Solar Industries, and Rossari Biotech. If you look at their all of these different companies, if you look at the PE ratio, Pidilite is 91, SRF is 41, and then Linda India is 97, Aarti Industries 23, but then they have a one-time high net income. That's why the P looks low, but in real time they are also trading around 35-40 P. And also if you look at the Gujarat Fluorochem, it's also again 40. Deepak Nitrite is trading 26. It's quite cheap. They are doing pretty phenomenal growth in their in the recent quarters. They grew pretty huge. And then if you look at the Solar Industries, it's also 61. Rossari Biotech is trading around 51. And then if you look at their shareholding pattern, so the promoter shareholding is pretty steady. And then if you look at the FII, so they are slightly increasing, so slowly increasing over different quarters. And if you look at the mutual funds, it's also pretty steady. I'm surprised because even after the huge fall, 50%, the mutual funds, it's also holding steady. So that's good to see. And then if you look at their mutual fund holding, shareholding and changes, so mutual funds bought in November, bought in December, they slightly sold in January, slightly bought in February, slightly sold in March. And if you look at the different mutual funds which are holding this particular company, SBA Small Cap Fund, SBA Flexi Cap Fund, UTA Flexi Cap Fund, Edulize, and then SBA Magnum, UTA, and then IDBA Sundaram, and then SBA Nippon India, Motilal Oswal, and then ICICI Prudential. So a lot of the funds from SBA holds this particular company. And if you look at the March 2022, so almost none of the mutual funds sold this particular company. Almost all of them or most of them bought are neutral, so that's pretty good thing. And then even if you look at their February 2022, only one fund sold, and all the others slightly increased their shareholding. So the mutual funds are bullish in this particular company. And the last section, valuation section. So the revenue from 2021, it's about 700 crores. 2022, it's about 1462 crores, and it is expected. And then from 2023, I'm expecting this company to do about 2000 crores in 2023 and 2300 crores in 2024, with a growth of 37% for 2023 and 15% for 2024. And if you look at the net income, so then it's 80 crores for 2021, 96 crores for 2022, and in 2023 I'm expecting them to do about 150 crores for 2023 and 215 crores for 2024, with a growth of 56% and 43% because of reacceleration of their margin expansion. And if you look at the price target with the current valuation, which is P of 51, then the 1 year price target would be 1388 rupees, and 2 year price target would be 1990 rupees, with a price cumulative growth of 56% for 1 year and 124% for 2 year. But then the PE is high. The PE can stay at this level, no questions asked. So, but then my personally, for this company, if they are growing around 15 PE, so usually historically they don't trade around this amount of high levels, 50-51, because market went quite high recently. So the PE levels also bit elevated, but I believe that with the conservative P of 35 would seem good, for example. But then even the P can stay at 50, or even it go to 60-70, depends on the performance and the growth and so on. But I personally estimate with a conservative P of 35, and then if you do that, then the price target would be with the P of 35, then the 1 year price target would be 953, and 2 year price target would be 1366, with the price cumulative growth of 7% for 1 year and 54% for 2 year, even with a conservative P. So this company is in a pretty good state. So it fell around from 1600 to almost 8888. So it's keep on falling. So the market is also because of the inflationary environment, and the reserve banks are increasing their interest rates. So the market as a whole is falling hard. So if the company falls low, then it will be much more interesting. So even at this level, for the long term holder, the company is looking pretty good, interesting. If you already hold this stock, keep holding. Yeah, but if you want to accumulate or buy this stock, yeah, you can do that. So the company is pretty strong. They have almost zero debt, so they are growing pretty good, and they are also innovating pretty good. So I think this company is a pretty good state. If you want to accumulate, the price is also good. If you can start accumulate from this price point, and then if it keeps going low, you can keep averaging your position. So the company is pretty good. So personally, I would say this company is pretty good for the long term holders. You can keep accumulating this particular company. If it keeps falling, you can keep accumulate this particular company. So for me, this company is a pretty good thing, but the valuation is not that cheap. If you just consider the PE of 51, even the forward PE, it's not that cheap. So I would still wait for the company to correct more. I'm not buying at this. I'm not going and buying at this particular company because there are a lot of opportunity in a lot of different markets. So I'm not going to buy at this price level. I'm still waiting. If it keeps, if it's very good opportunity, if it's a very cheap valuation, then yeah, I'll go ahead and buy. So I'm not buying at this valuation. I'm putting this company in my watch list. But then you also have to consider the risk. What are the key risks of this particular company? You have to consider the raw material prices are keep fluctuating due to the volatility of the prices, inflation in the environment. A lot of their raw material price are keep going, and they also keep going high, and they also have a huge supply chain cost now. So that's also affecting this particular company. So, and also they don't have long-term agreements with the customers, so they only have a kind of short-term contract. That's also a risk that needs to be considered. So these are the main key risks of this particular company that you need to consider before going ahead and buying this particular company. So personally, for me, this company is a good buy. So I'm not a financial advisor, so this is all my personal opinion. So you have to do a due diligence before investing in any stock. So that's all for today, and thank you for watching. And if you like this video, please like, share and comment. If you want a free email newsletter from this channel, please subscribe in the link. If you want me to analyze any other companies, please put it in the comments below. So thank you for watching and have a nice day. Bye bye.